And hi, everybody, it's Tim Reazor, Danny Stewart, Don Vandenbord, Hunter Mazingo. It's Your Money Radio. Listen, there's a lot to cover this week. I want to get right into it. I've got a whole list of things here, Danny. Danny, listen to this cornucopia of things that I want to talk about. Okay?
That's a big word for you, Tim. Cornucopia.
Danny, cornucopia is a Thanksgiving word. We're coming into cornucopia season.
Can you spell it?
Yeah, cornucopia. And so when you're looking to use the word cornucopia, you really only want to use it in the November timeframe because that's what the, well, I think.
See, Dan, if you keep chiming in, this is why we get off track like this. Just let Tim talk.
Hold on a second.
I'm sorry.
Hold on a second. Are we really off track, or are we just driving the train where we want it? I don't know, because what we haven't mentioned yet is Hunter's pilgrim haircut.
I thought it looked great.
I brought that up before the show. I said he went from college to junior high with it.
Like Pete Best got a haircut, the fifth Beatle.
You do look about 8 years younger with that.
And that's
what people say. I almost left the facial hair today just to kind of counteract it, but I decided against it.
You went clean cut. You get another haircut, you have to put your diapers.
Love it. I got a lot to cover here. So I've got algo. I want to talk about algo flushes. I'm looking at my notes here. I want to talk about setups. Oh, God, Daddy, I had such a frustrating day, and rarely is it a day where I just, you just kind of just throw your hands up and you're like, oh, for the love of God. I want to talk about that day on Monday. But that doesn't stop you from doing the work. It's just the feeling of frustration, which can really stop people on their tracks. And I want to talk about that. Maybe some VIX inversion, a stock nerd, Jeff. Really interesting thoughts on the VIX inversion that I might be able to get to. I want to talk about the intercorrelated assets, TNX, DXY. Danny, I want you to talk about Robinhood. I want you to steal from the rich and give to the needy. But Don.
Yes.
You know when I say Don and pause that it's big.
I can't wait.
No, that's not your can't wait face. Your can't wait face is a little bit more involved than that. You're looking for downside alerts that aren't coming. It's going to be a good day. So here we go, Don. I want you to pay attention. Hold on,
This isn't sports cards, is it? Because we're not supposed to talk about those anymore.
Listen, we are on a no fun. We are on a no fun policy. Hunter is the only one who is serious.
I want to know what shirt Don has before you go.
Oh yeah, Don, what is your shirt?
FSU dad. One graduated, one a sophomore.
2 years to go.
2.5.
They both went to FSU.
Yep.
What's the allure? Is there a special program there, or just I'm genuinely curious?
Well, I had the Florida prepaid college program, so they could pick any school that they ever wanted to go to for college as long as it was in the Florida prepaid college program. And we visited a bunch of them, and Florida State had the nicest campus.
Really? Nicer than university? Is University of Florida private or public?
That's one of the Florida State schools.
Oh, it is? Okay.
Yeah.
Miami's private, right?
Gator fans are obnoxious.
Dude, I don't know why you're not sticking to
a lot
stocks,
of SEC fans are obnoxious. What about
No. Miami's ACC.
Miami's ACC. Florida State is ACC.
Yep.
Actually, isn't Miami big? No, they're not ACC anymore. Or are they back? You know what?
Miami,
I used to know all these, and then they started throwing money around and moving them all over the place. I used to know
Miami's ACC.
Ask Connor, he'll know. Ask Connor.
They play Clemson. Yeah.
Yeah, they are. And you got Notre Dame as an honorary ACC member this year.
Love it. Okay, Don. So you know how we run through all our Twitter handles and everything. But I was listening. I was bringing Reagan home from swim yesterday. No, I dropped Reagan off because I had to shoot the video because my computer exploded. And then normally I have it timed better. But anyway, that's a whole nother story that we won't cover because we're not supposed to talk anything about stocks here. So I'm driving home and I put on, Don, the Sirius XM satellite radio Christmas music. But hold on. But I choose hard rock Christmas music.
Well, you're half right.
It's a sub channel, right? And now I'm not going to play it because you won't hear the sound. I don't want to ruin it for you. but this song from Twisted Sister comes on my radio. Look at that face. Oh,
That's beautiful.
Okay.
Oh, come all ye faithful. You got to be kidding me.
So there's a minute lead up where I'm going to play it. You won't hear it, but I'm going to play it. And I want you to see the expressions that are coming from this woman and this guy. And then you see Dee Snider pop out. And now imagine the song, We're Not Gonna Take It, to Come All Ye Faithful. What? Best Christmas song ever is what you've got here, Danny. Imagine, we're not gonna take it, to Oh Come All Ye Faithful. Little baby Jesus ain't gonna take it no more. That's where we're at here. In a major, screw you, I want a Holiday Inn. Like, that's where we're at with Dee Snider. And let me see if I can get this to play. You can't hear that, right?
No, you would have to play it on your phone and hold it up.
Not gonna do that.
She looks like a very friendly mom right there.
I think we've all divorced this woman. So, except you, Hunter.
Yeah.
Now look who pops out. It's Dee Snider. All ye faithful, joyful and triumphant. Exactly, Don.
There's JJ French, the lead guitar player.
Is this not the best video? You don't even hear the words. I hear the words. You have to play this at home. You're mesmerized, because I'm mesmerized.
I love it.
Hold on.
What year did that come out? 2008.
I was going to go look it up.
That's awesome.
Oh, that's too funny.
That's good stuff.
Looks like Don and Tim actually finally agreed on some music. I'm gonna have to put that in my calendar. You know how that happened? It was heavy metal and Christmas music combination.
People that are only listening to the audio version right now are completely missing out.
Yeah. Listen, that
picture spoke 1,000 words.
That video by far, one, I don't know how it's not one video of the year every year since its inception. Two, why is this not on heavy rotation on FM radio? Three, oh my gosh, how have I never found this? Hunter, are you familiar with the Twisted Sister?
Vaguely.
Like,
you haven't missed much, Hunter, trust me.
Like, can we just address why are there cross-dressing rock dudes? Let's address that. Why is We're Not Gonna Take It one of the most
That's not cross-dressing.
That's not cross-dressing?
Lead singer, yeah, on that video it was.
He's always not cross-dressing. Wait, has Dee Snider not been a... Do I have this confused?
I thought he was a little bit, but he was there, Don. He was wearing a black bra.
That's just the typical 80s. That's the typical 80s hair metal garb.
But that was cross-dressing, right? Like if you...
No, it's not cross-dressing.
Potato.
Women's clothes, men's clothes.
Listen, nobody knows more about this subject than I do. The guy who called Paul Stanley an ass on Twitter last week.
Oh, Don, that's what
I told you what?
Hold on, Don's heart's broken. Paul Stanley.
I did have a minor heartbreak episode.
And
yeah,
so,
I did.
Look, I'm being the friend that introduces him to Dee Snider and says, look, Dee Snider's got what you need. Dee Snider's it won't hurt to go home to Dee Snider like it does Paul Stanley. Dee Snider's not going to yell at you when dinner's not on the table. Dee Snider would make a wonderful companion. So what I'm doing, Danny, is I'm like Match.com except for washed up rock stars. And so
Dee Snider wouldn't make stupid political comments on Twitter either.
Danny, Don is hurt. You can hear it in his voice. He's had an emotional breakup. And so what I can do is introduce him to all the rock stars I know, like Dee Snider, and bring him joy with Christmas music. Because Don hates Christmas. Everybody knows that. But
there's no reason the market should be closed on Christmas.
But if I could just introduce Don to the feeling of the season through Dee Snider's song, We're Not Going to Take It, to the tune of Come All Ye Faithful, I think we can turn Don here into a Hallmark movie. Like the whole story where Don has his heart broken by Paul Stanley. Is it Paul Stanley?
Yeah.
No. Oh, Paul Stanley. And then he gets it all turned around. I actually think we should be shooting this film right now and not talking about the stock, not talking about the stock market. And we should create the script for the Hallmark movie that is Don's life this season. Don, do you even know Hallmark has a channel?
I do. They're ridiculous.
Best movies on TV. Come on. Anyway, S&P.
They've already started 2 months. I mean, they
every single plot the same. You got them. I
told my wife that exact same thing last night.
That's how you know it's a good movie. You know where it's
starting
headed.
to watch them.
No, man. She started to? That's great. I love AK. Great. Best driver I know.
How about some stocks for Christmas, for stockings? How about some stocks for this Christmas? Be winners. I feel like that segue. That's professional radio.
Jesus, Danny. It's like you went to the Hawaii School of Medicine upstairs. Hi, Dr. Nick. So if anybody watches The Simpsons over the years, that is a great reference. S&Ps are going to an all-time high. That's my thought. And it's based on the chart pattern. So I think what you want to be doing here, stock nerds and market lovers, is no matter what you think is about to happen to the economy, no matter, and because I'm emphasizing the words you think. Now, it's Friday. It's almost 11 Central on November 13th. It's Friday the 13th. This could change. It's a market. Anything can happen. But for the group that says somebody is the president-elect and the economy is going to go to hell in a handbasket, I want you to think about the time 4 years ago where guys like Ross Gerber were telling you to sell everything. And I can't begin to tell you how wrong that was. And so when I talk about investing is psychological, then you got to put your political feelings aside. This is a critical moment in this market's juncture. I'm not saying it's going to go to a new high for sure, because there are no absolutes. But when I look at, say, this daily chart, and I'm going to switch it now to like a 3-day chart. Let's get it to a 3-day chart or a 2-day chart. So we'll switch it. And all you're doing is you're looking at patterns. And if somebody wants to tell me, well, I've heard this, when you're looking at charts, Tim, you're not looking at the fundamentals. Okay, what are the fundamentals of the S&P? We could have that show. But more importantly, do you understand what price represents when you're looking at chart patterns? Price represents the real-time upgrades and downgrades of stocks by the people that matter. Mutual funds, pension funds, and hedge funds. The people that, and algorithms, let me add algorithms to that. The people that drive price in the market space. That's what you have to understand. And so when I'm looking at that S&P chart, and I'll take it out to a weekly. Most people don't look at 3-day and 4-day charts or 2-day charts. So let's take it out to a weekly, and we'll just look at this pattern. And you're like, well, Tim, that's a topping tail. It is a topping tail. I don't disagree. And it hit new highs this week. But you're now trading, for the most part, above this high range. You're trying to anyway. Now, whether this becomes resistance and we consolidate up here, or we just pull the hell back, I look at this on an average true range chart, and we're really not quite up to that third ATR. If I take it back to a daily chart, oh, I'm sorry, I switched charts on you, but the wrong chart set. We have room to get up to the second ATR, and we have room to come up and retag that third ATR. Well, just because you have room, Tim, doesn't mean it's going to go higher. I agree with you, but do you understand how I focus on consolidation so much because of what they represent? Consolidations represent supply and demand in the market space. And so the reason why a consolidative phase is able to happen is because there's some buyer stepping in there. And so like if I draw this on your chart like this, and this is a simplistic explanation, but sometimes you don't need to be complicated to actually achieve superior results. So this oscillation is occurring because there's a buyer that comes in and he steps in and he buys it when it hits this price area. He stops buying it when it comes here. Tim, how do you know he stops buying there? Listen to this phrase. Price, it doesn't take news for a stock to fall in price. It can be news. It takes the absence of buying. The absence of buying stops the forward momentum of price. So the pressure of all these shares being bought dissipates, and what's the stock allowed to do? Gravitate back. That's true of mutual funds, pension funds, hedge funds. It's extremely true with algorithms. And so what you see here is a consolidation. Consolidations are continuation patterns. And so for me, I love the consolidation pattern because you get the uptrend, and the stock typically or an index will move 15 or 20%. And and Don's lamented on in a number of his videos, the O'Neill rule, hey, take profits at 20%, or it's a good idea to. That's because the next phase of a stock's journey or indice is consolidation typically. They just don't go straight up. So now as a money manager, you need to think about, okay, do I want to hold through that consolidation? Or do I want to take profits and reallocate those assets to some other product or some other place that might be able to do better than just sitting waiting for this consolidation to work itself out? Because there's no time. A flat base takes 3 to 5 weeks, or excuse me, it can be 5 to 15 weeks, pardon me. My favorite pattern when I see it is a 3 weeks tight. Why 3 weeks tight? That means it's closing within about 1 to 2% of itself. And the price is so precise that the money managers aren't letting that stock go anywhere. They're keeping it there till one day there's not enough supply to meet demand, and then it explodes higher if the market is still intact and the story of the stock is still intact. And so when you see S&Ps doing this, or any stock doing this, it's extremely bullish. It doesn't mean it's going to go in the direction I'm talking about. And if I look at the NASDAQ, which it's got not as tight, but it's the same pattern. And so let me just cough off screen here while I mute my microphone. Okay, I am back. And so this is a beautiful chart. Now, Monday was a hellacious day because you shot up, had the Pfizer news, pulled back. But when I see this pattern, it's really just the same. And so can we go up and get that old high? I think you can. And it would fly in the face of everything you've heard leading up to the election by, I was about to say by common people, but I don't mean it rudely like that. I just it was the common talk that if certain person potentially won the White House, this market was going to fall flat on its face. And so I think being able to navigate that, and what are you navigating? You're navigating what you're seeing vice what you were told or what you might have thought. And this is where people get hung up on, because you, in the face of a bullish S&P chart or in the face of a bullish NASDAQ chart, you're saying things like, oh, just wait, it's coming. And before you know it, Bob's your uncle and you're missing out. And so, well, what does that look like, missing out? When the market did this back in March, this is a weekly S&P chart. When the market did this back in March and then it rallied up, I mean, there's just a ton of people on the sidelines cheering for this thing to go back down because there's no way it can do this. And yet it hip checks the 21 a couple times along the way here. And yet here we are, just we're trading in and around above that breakout range. Like that's astounding. And there's a number of reasons why. You can assign reasons why. You can look back in hindsight and go, well, of course it's doing that, Tim. Jay Powell flooded the economy with money. Or you could say it's Trumpism, or you can say, well, that's opportunities. There's a number of reasons you can assign to the why. But when you're in the moment, you need to be able to act. And looking right now at S&Ps, do you want to be bullish or bearish in the market? And if you are going to tell me you want to be bearish, that's like looking at an x-ray of a broken leg and saying, there's nothing wrong with that guy, get up and walk. You just can't do that. Now you can do that, but you're arguing against machines. You're arguing against the people that control the market, and it's simply not worth it. And you're going to spend an extreme amount of time frustrated, and eventually you'll get the FOMO, and that's when the mistakes happen. Don, what you got for that?
Isn't it more like looking at a leg that's fine and telling somebody that it's broken? If the market's working fine, it's the opposite side. But I get your point, and that's a great analogy, because the market, what you think, if what you think is not in sync with what the market's doing, you're arguing against reality. You know, you can no opinions, no opinions, no news. What's the market doing? What are the indices doing? What are the leading stocks doing?
And that brings me to, I want to talk a little bit about edge and developing an edge, because Don has a process, I have a process, and there's a reason why Don has brought, and it's all Don. This is Don, this guy here with the, that is some awesome, look at that hair. Am I drawing on his head? I can't tell. I don't think I'm drawing on Hunter's head.
You're drawing on
not on our screen.
Drawing on the S&P on 10-12.
See, that's because of
Right
where I have the
before a
camera.
pullback.
So, and that's why Don has Hunter bringing you the relative strength of stocks, or what sectors and subgroups are working, and because those are the facts. And so, like when you look at a chart here of KRE, this is, you're like, Tim, that's a bullish chart. Oh, it is right now. But this is just a year chart. And if I take it back a week, if I take it back to a weekly, look at what the banks have done since 2018. And so that's not strength. And the banks haven't been leaders in a long time, but how many people come on the media, your Twitter feed, whatever videos you subscribe to, this, Don, is the time to resort to the banks. This is when you buy value. And look, if leadership is going to exert itself into the banks, I will participate, but it's not there right now. And looking at the leaders, it's one, Don says always look to the leaders, but I don't think, Don, people understand what leadership is. Can you define leadership?
Yeah, they're the stocks that are outperforming in a bull market.
Okay, so
I absolutely take that for granted, that people, I mean, how about a leader is something that's leading? I know you can't ever define a word by using the word itself, but yeah, the leading stocks are what's driving the uptrend.
But I think what happens, Don, and I know this because of letters we get.
Well, nobody's asked that question, so I don't know that I agree with you that people don't know what leaders are.
Oh, there are a ton of stock nerds that I don't think could define leadership. And
well, and I'm going to argue they're not stock nerds, because if they were, they'd be following the market and they know what's going on.
Hang on. I'd like to jump in here. There's a lot of people that are very active that attempt to be, well, let me put it this way: just because you're a stock nerd doesn't mean you're good at it. There's a lot of people
hold on now. You guys are.
I'm not being ugly. I'm just saying this is very difficult to do, and they're getting a lot of misinformation, which is kind of what you're going with, Tim, that the financial media is putting out a narrative and people can get sucked into that.
No, Dan, stock nerds know all about the misinformation, because first of all, let's define stock nerds. I'm defining them as people that are following us. I mean, you trademarked the term stock nerds. Tim uses it all the time. It's the group of people that are following. Yeah, it's the type of people that are following the process that we talk about. So to say that a stock nerd is paying attention to what the media is saying, I don't agree with that at all.
I think
then they've been ignoring us, who's telling them to ignore the media.
I think Tim is using stock nerds in a broader sense of market participants.
I think that every stock nerd is somewhere different on their journey. Yeah. And so, Don, we get new stock nerds all the time to our work. And so I don't think that it's, and I don't think you meant it this way. Like, it's not adversarial.
You know what? You're absolutely right. I'm thinking of a veteran stock nerd. You're right. A new stock nerd needs to go through the educational process. And point well taken. Okay.
But even when you're a veteran stock nerd, Danny, it was 2014. I was in my office at the old tower, and when I said to Danny, I said, Danny, I want to call the people stock nerds when I'm talking to them, because that's what we are. And I said, are you okay with it? He goes, yeah, label them, go ahead. And I'm like, all right. And then I don't know when you trademarked it, but is that still active?
A couple of weeks later, yes, I'm actually have to renew it. Thank you for reminding me.
There you go. Yeah, that was the first. Wasn't the first person that loved stocks, but I was
Same
the
thing
first.
with protection, Don, and robotection. You got to make sure.
All right.
Yeah. So anyway, I think stock nerds are all at a different place in their journey, and I think even for the most ardent stock nerds, they are okay. Am I missing the rotations are vicious? Like when you see that move in the Dow and then the Nasdaq sell off, those are really vicious. And Don, it's a fine line between. And I've said this to Don when I feel myself like in the, I don't know, in the purgatory of the market is the only way I can describe it. I'm like, Don, am I being stubborn or am I sticking? Like, what's the difference between believing, honoring what you're seeing, being stubborn, or just sticking to your guns because you have a process? Like that, it's really hard. And so banks aren't leaders here. And you're like, well, Tim, they've jumped up. I keep this chart of KBE up, but they're not leading. And so the stocks that are leaders are not going to come from this group. Like if we look at XOM, these stocks might have some days. Like XOM's up almost 2% today. There's nothing leadershipy about this. But when oil catches a bid, you're like, okay, this is when we rotate into these stocks, and you hear it from everybody but us. And it's why if you're paying attention to what we're doing in this longer format show, we've enhanced it. We've got Hunter giving you, okay, these are the areas. Like Hunter was DAR, right? Darling, DAR. Let's just bring Darling. Hunter was talking about
I've got that group to talk about today.
Yeah, and like, so this is what the leadership looks like. Like when you're looking at this consolidation, okay, and you can see that in supply can't keep up with demand, it pops. This consolidation, supply can't keep up with demand, and it pops. You see this consolidation, supply can't keep up with demand, and it pops. And so that's the leadership. And so look, a lot of stock nerds just want, and I don't want to use the word, I don't want to use any kind of degenerative word here, but when you say you just want the answers, I say that the people that say they just want the answers are the people that don't understand the question. Why is Darling leading? What does it represent? What are the fundamentals of Darling? Because a lot of people don't understand that our process is 70% fundamental, about 30% technical if you're going to put percentages on it. Meaning that we're looking for an acceleration of growth. We're looking for an acceleration of revenues. And there's metrics we're looking for in there by percentage. We're looking for institutional support. But then you have to match that with what? With Danny, with the markets. And so if I'm looking at SPX again,
Well, go back before you go. Can you go back to Darling real quick?
Yeah, Darling. See how I did that?
Yeah, thank you.
Sweetums likes Darling.
Okay,
Oh,
now.
Sweetums does like, I forgot about Sweetums.
I need to put that below his picture on the website. Hunter,
yeah, Sweetums likes Darling.
Sweetums. One say no.
It's hard not to like that chart.
Yeah. So when you have those three levels of consolidation,
Sure.
And that's okay. Yeah, that's fine. But if you look back to the left, right before that stock rolled over hard, it also had a little period of consolidation. But that's why you got to use the technicals to sell, which is kind of what we do. So if you bought there in that first consolidation Tim just drew, and then the whole thing started to roll over and it breaks 21 of the 34, you start getting you don't stay in.
Danny,
your consolidations where it's moving higher.
Let me pause you for a second and tell you that you're brilliant.
Yeah, I know that, Tim. Thanks.
Oh, that's what we needed to hear.
I'm going to put that in the clip.
Let me tell you why. Because you're leading me right where I want to go with having an edge. So look, stock nerds, if you can't figure out this show it's planned by me in my head. I write some notes down I want to talk about.
Which is a scary place to be.
Well, that's how you look. It's a good place to be because you're getting honest conversation. Like I wish the stock nerds could be on our morning phone call sometimes when we're hashing out issues, because it's insightful sometimes. Sometimes it's just dumb, or not dumb, but it's nonsensical, or it's just mundane. But seeing what we're talking about doesn't make it all like you guys are, except Danny, who just said he's brilliant and he knows it. But there you go. Catch a win when you can, Daniel. But Danny brings up a great point. What about sell rules? But that's not where I want to go. I want to talk about where's your edge. And that's going to lead me to the next part of the show. So look, the purple line, I'm just going to write them up here, the purple line is a 5 exponential. The green dotted line is an 8 exponential. The pink line is a 21 exponential. The blue line is a 34 exponential. The red line is a 50-day simple, and the gold line all the way down here is a 200-day simple. No one in our shop would ever buy Darling up here. It's a pretty strong statement because you don't have an edge. Well, Tim, you talk about consolidations. It meets all the criteria of your fundamental and technical process. What's the problem? Even though Darling is at a point of least resistance to go higher, because stocks at new highs tend to go higher. They do. But what happens? You lose your edge when you're buying up here. It's not all the time. And I'm going to have Don just tag this right now I want to talk about your gap rules if I don't come to it, okay? Because there's a difference between Don's gap rules and what I'm discussing. Those are special situations. It's not hypocrisy. There's special situations, and I want Don to cover those in a second. When you buy closer to the mean, the 21, now granted this stock had earnings, okay, but pretend it didn't have earnings. You're giving yourself the best place to buy the stock with an edge, because you need an edge in this market because of the algorithms, which I'll talk about later in the show. You have to have some definitive setup that gets you in or gets you out. And for me, that's buying as close to the mean as I can in a stock that's one of my favorite setups. And then if it starts closing below the 21, I know I've got a problem. I should probably sell. Do I do that all the time? No. Am I human? Yes. Does it lead to mistakes? Yes, it does. It absolutely does. Actually, I don't like, why is faulty the only word I can think of? I'm human, and I deviate sometimes. And I'll tell you, when I deviate from that rule set, it typically doesn't work out. The worst thing that happens sometimes is you deviate from your rules, it works out, and you're being rewarded for that. And so if you buy closer to the 21, and it's okay to be wrong. As Don says, it's okay to be wrong. It's not okay to stay wrong. Do I have that right? Yep.
Correct.
Yeah. And so you know you're wrong. Okay, we got a close below the 21 here. Watch out. And now there's another close below the 21, close below the 50. Sell. When you buy at the 21, so now stock's trying again, you get a couple closes over the 21 here, and I know I've got some red lines drawn there, but you're over the 21, it's consolidating, and now you can see what the stock's doing. Buying closer to the 21 is the edge, for me, is the edge.
And those moving averages are stacked.
Moving averages are stacked, or I'm getting a trigger from a moving average cross, like a 5 through the 8, or an 8 through the 21. I'm getting a trigger for that. And that gives me my edge in buying things. And I've done that 2 or 3 times this week that I'll illustrate here a little bit. But I think this is a great place. Danny, do you need to translate any of that for people? Because there's a difference between just buying a stock or edge.
No, I think that's pretty good. The only thing I'd say is when Kim's talking about a moving average cross, if the 5 is crossing the 8 or the 8 is crossing the 21, it means the shorter term momentum is overtaking the midterm momentum. And so it's a much higher probability that that stock's going to go up in the shorter term. And it gives you a little bit of buffer to be able to, well, like Tim says, have an edge or have a little bit of a buffer once you get established after a couple of days.
And
So
I'm going to
no.
add
Okay.
2 more criteria that are going to increase your odds once you get the stock at that point. And William O'Neill on IBD Live within the last year, Mike Webster said, William O'Neill looked at me and he said, remember, Mike, it's not the chart that makes the stock double. It's the story. It's the N. So when you get that consolidation and that pullback and you've got relative strength on your side, which means because a chart can be misleading without a comparison to what every other chart in the market is doing and what the indexes are doing. You get relative strength on your side, and you also get something new, something that's going to make people want to buy the product or service that the company is of the chart that you're looking at. Add those two things to the setup, and that really increases your chance for not only success but outperformance. Because if you buy it right and it goes up just the same amount as the S&P 500 does, all you did is buy the S&P 500 with single stock risk, and you didn't accomplish anything.
So that is tremendous. Just by the indices at that point is what Don's saying, and that's huge. It's huge. And so what now? Look, what Don? Someone's going to say, well, Don just added two things. But those things occur in stocks every day, every week. You just have to be able to screen for them. And so, like this isn't like finding a needle in a haystack. A lot of it has to do with being patient and waiting for your setup, whatever your setup is. And so that right there, I really think we could end the show with just that, because that's it.
We're done. There's your gold nugget for the day.
Yeah, like, well, that developing an edge and then getting really comfortable in and around operating around that edge. Well, you're going to bypass so many things. Like, Hunter, give me a hot stock, not a leader, like just something that somebody's been chasing. Or Don, anybody. I'm trying to. I don't follow.
FTCH.
Okay, I don't even know what that is.
Yeah,
but
that one looks strong again today.
Okay, so Farfetch. What is Farfetch?
They are a platform for luxury goods that just had Alibaba just invested in them, and they just reported blowout earnings.
So that's a double. So that gets on your radar. But where is your edge in buying Farfetch up here? Yeah, God, I'm sorry.
It's highly reduced, and I wouldn't buy it up here because it already had the prior run. The ones that you want to look for, and the ones that I will chase, are ones that are forming a base. They report earnings and they blow out of the base on massive volume. That is indicative that Wall Street is wrong on it, and they're tripping all over each other to get shares of it because they need to outperform their benchmark.
Pause there, because listen, people hear what they want to hear on this show. It's happened to me so much. So I want to be really clear that Don just started to talk about his gap rules. Don, so real quick, I want to just do this with Farfetch. So somebody tripped up here and they got it they're like, I got to get this at 50.36. You don't know if that's the high water mark for the stock for a while. Now, it might be one of the situations where it just pulls back to the third ATR, consolidates, and the ATRs catch up. But if you understand what the ATRs represent, it helps you tremendously. And so this is, if everything reverts back to the mean in life, it gets too far over its skis, however you say it, too big for its britches, too far over its skis, it's stretched, it's extended. If everything reverts back to the mean, and you understand what the mean represents, it's the 21 exponential moving average. And for Farfetch, the average true range is $5 a day. So Farfetch is up 3 right now. And you're looking here so this is one $5 range, a second $5 range, and a third $5 range. Same thing with below. So Farfetch is stretched. It doesn't mean it can't go any higher. But how do you get into this thing and get an edge? You're going to wait for a pullback. That's not, which begs the question, Don, what's the difference between a pullback and a sell-off?
Whether you own it or not.
I knew Don would have something for me there. I wasn't sure what. Can you give me?
Look on a daily, and the optimal time to buy Farfetch was on 11.3. That's when it had its high volume breakout out of the base.
Let me get the daily chart. 11.7, you say?
11.3.
11. There, I'm right here. Yep.
you don't have volume on your charts. What volume was?
Oh, this green dot is volume. When you see a green dot on my chart, that's volume that exceeds O'Neill's characteristics.
Yeah, 413% volume, up 14% that day, and then it just took off after that.
Yeah, I have volume programmed on my charts. It's just I have it. I only want to know volume when it exceeds certain characteristics. You still laughing at that? That's a good joke, man.
That's class of the Oracle from St. Augustine.
Yeah.
So buying from consolidations can be having an edge that you can define, but somebody's going to chase this and it's going to pull back. They all do eventually. It's just where, and a good one to look at, and I want to get into Don's gap rules here in a second, is space. Space had itself a year this year. So let's do this. I'm on the daily. Space, it launched itself early part of this year. And now look at the sell-off. And it doesn't mean you can't buy space here, but just know that you're going to face trapped buyers, pardon me, at 24, 27, and 42. Like there's a bunch of people that have bought this all the way up and they're just waiting. And if people understood what this represents, so space has this massive sell-off, it makes a little bit money back. And the reason why you can't get up there is because people say the Lord's Prayer of stocks. Dear God, please just let me get a little bit of my money back. And I swear to God, I'll never do this again. And then more selling. It can't get any traction because all these people now sold and they say the prayer. All these people now sold. Shoot, I should have sold here. Should have sold here. I'm selling. And then it just goes on. That thing needs a tremendous amount of time. And so, Don, let's do your.
Another thing about space, and this also goes with NKLA, very similar action to space. They're, as you would say in Texas, they're all hat and no cattle. They've got a story and no revenues. So you have no revenues to back the story. That's all you have is a business plan at that point.
I heard somebody on TV saying about space, there's a space conference this coming week. Maybe it was this week.
Where, on the moon or where? Sorry, I couldn't help it.
It was some dude on, I was flipping through the channels one afternoon, and it was some dude on CNBC, and he's like, final trade, and someone goes space, because there's I think Gold, like one of the firms is having a conference about space, and my thought is, that's such horseshit. Buy it because there's a conference going on and it's going to move higher. Stock is hot garbage, and that kind of advice, by the way, those shows, they're not advice. Never take it as advice. Why open your mouth? Like, this isn't advice. We tell you, it's all study purposes. We're giving you education behind it. You never hear us come on and go, Don, give me the 5 stocks going higher next week. No. I mean, we might say that as a joke to make fun of those people.
We're also not in the representing the sell side, being an investment banker trying to underwrite these stocks and making money off the corporations. Big conflict of interest there.
Well, that's the whole.
By the way, that's the whole reason for the conference. By the way,
yeah,
pump that industry.
That's the whole upgrade downgrade game, right? Because a bunch of people missed out, so they got to take it down so they can take it right back up. You don't think that happens? That is not nonsense. Don, give me your gap. Give me a stock that's gapped. Give me your rules so we can define this, because you wouldn't chase far-fetch, but there are stocks that you will pursue, and I'd like you to go over that, please.
Yeah, Pinterest, PINS.
This is one of my favorite setups in the entire market space. I love Pinterest. God almighty, I love Pinterest. Look at that.
So this one of the, always go back and look at Facebook in 2013, I think it was. I'm not asking you to do it, but I'm saying.
No, let's do that first, because I think we did this once before, but it's such a great point, and I want people to understand this. Here's the earnings right here, Don.
Right. So July in 2013, Facebook, which had been basically a failed IPO at that point, it really had gone nowhere. They came out and they announced earnings, and they blew it out of the water because they made money off of mobile for the first time. So that changes the entire business outlook, the entire business plan of what analysts were thinking about Facebook. It gapped up 30% on 750% above average volume and has never broken the low of that gap up day since then in 7 years now. So you're looking for stocks that have their Facebook moment of July 2013, meaning Wall Street is offsides. They report earnings. They have something new, whether it's a product or whatever, that makes their valuation and their forward-looking sales and earnings, you have to totally remodel them. And on 7/31 of this year, Pinterest gapped up 36% on 650% volume, and it's nearly doubled since then. In fact, nearly doubled.
Nearly doubled
Since then. These are the stocks that I'll chase because something changed with it, and it took a while for it to get going. It went sideways for 4 or 5 weeks as the market was consolidating a little bit, but it never broke the 21-day moving average on a close, and it hasn't touched the 50-day moving average since then. These are the ones you want to look for. Snapchat also had a very similar reaction just in the last couple of weeks. Massive gap up, 944% volume, up 28% on 10/21. It's consolidated it since then, but it's still up on it about 9%. And it changes everything. It changes the way Wall Street and analysts and pension funds, hedge funds, and portfolio managers are looking at a stock like that.
1000%.
And if it gaps up, it should hold the low of that gap day. And if it doesn't, it means either the market's not right, or for whatever reason, people have decided to sell. Maybe they're taking a different look at the tack that people might be buying it. Sometimes they just go sideways for a little bit and roll over. That happens all the time. That happened in Netflix with one of its big gap ups because Carl Icahn decided to unload his entire tens of millions of shares that he owned.
Yeah.
And you just never really know. But you look at it, the bottom of that gap up day should hold, and ideally, if you've got a true winner, you'll never look back and it won't break below that. Those are the ones you pay up for.
Yep. So what are the rules for the gap up, Don?
So there's three different ones, and they can be inflection points as well as gaps. There could be a very wide range with a stock trading around where it currently is, and that's typically algos taking out buyers on the upside of the range and to the downside of the range. They collect all the stops, and then if the stock breaks below the higher low of that daily range when the event occurs, you go in that direction. With the gap, you can have a gap up and it continues higher, or you can have a gap up that puts in a high and it fails and comes down since then. So you can react. A gap doesn't automatically mean success. You watch the low of that gap day and how it trades after that. Similarly, you can also have a gap down that puts in a bottom.
Give me a stock with a gap down that's put in a bottom. Give me one of those.
We bought Chipotle. No, Fastly failed their initial gap down, but money has come back into it since then. Fastly was one that it gapped down and it broke the bottom. When it breaks the bottom of the gap down day, if you didn't sell in that gap down day, you definitely want to get the hell out of the way. But some stocks put in a bottom on that gap down day and they start being accumulated. So there's 3 different ways it can go and 3 different reactions you can have based on that initial gap down day. And nothing's perfect. Ever, but with rules you can put the odds in your favor, keep your losses small, and hopefully latch on to a big winner.
But you also have to be paying very close attention to gaps because they tend to move more rapidly. They move fast.
They do.
So let's do this real quick.
Hey, Tim, before you, just to go back to your point, not to set us back, but on having an edge, will you pull up a daily of DAR?
Sure.
And if you look closely around 10:28 through 11:04, you can see that they pulled back to the 21, right around $40, $41, but yet they never closed below it. And lo and behold, they ran up to almost $50 about 5 or 6 days later. They're trading at 47 right now. So just an example for not buying when they're extended. You wait, they show strength at the 21 and they bounced off of it.
All right, let's do good. Very good point. Let's do this. Let's go over the moves we made, but very quickly. I want Don to do some moves. I did some moves this week. Look, stock nerds, we get asked.
And Hunter still has to go over his relative strength.
Very well aware.
I'll be quick with mine.
Okay. All right. I just
well aware, Dan. Professional broadcaster over here, able to. So look, one of the biggest questions we get asked is send us. Well, Danny gets asked to send us brochures. We don't do brochures, and then I'd like to back test you. The easiest way to back test our work is to go to Revere Asset, go to Daily Market Insight, and I believe there's 171 pages. Yep, 171 pages of videos that we've done. You can pick any time frame that the market was in a bullish phase and an extremely bearish phase in the last 6 years, and you can go back and see how we've handled it. Like the first video, what is the first video? Here it is, April 7th, 2014, about a month after I arrived at Revere. And so you can see everything that we did here. And so it's a way to see just how we adapt to the different market environments that we faced over the years. And then look, if you have any questions, concerns, comments, here's how it works. If you take umbrage with anything that I'm saying or doing, okay, you can email me, but the better thing to do is file a complaint with Danny, America's fiduciary. Okay, if you have compliments, send them to the fifth Beatle here, Mr. Hunter. I
think we need to replace his picture with his new haircut.
Don just gets, if you want to send holiday cards to Don with Christmas greetings, CD singles of Mariah Carey's All I Want for Christmas Is You, you send those to Don. And so, because Don, if there's one thing I know about Don, there's two things he loves, Whitney Houston and Mariah Carey. And so, because Don is saving all his love for you. And so it's Don at revereasset.com. But look, if you want to come on board, you're like, how do you guys do this for me? If you find it's too much, you find yourself missing the setups, call us. I'm telling you, it's the least expensive thing you'll do this year. That's my bet. And then the second thing is, if you just have questions, there's something to point out here. We are the empowerment for individual investors. We don't have any salespeople. Notice that Don, he found Hunter, brought Hunter on. Hunter is not a salesperson. Hunter is a research person, an execution person. We still don't have any salespeople. It's our biggest selling point that we refuse to hire salespeople or staff that do such things. If you call, you're going to get America's fiduciary on the phone at 855-732-5932. If you had some douche nozzle, Danny taught me that word, sell you a life insurance product as an investment, one, it's illegal, and two, it's not performing. We know it's not. Call us. We can rattle the cage of who did that to you and potentially help you out. If you had the same said person sell you an annuity, maybe they did it to you at church, they're going to hell, one, and two, Danny might be able to help you and recover some of those fees. 855-732-5932 is how you do that. If you just simply have questions, call. Don't ever be afraid to reach out to us. We're not going to spam you. You're not on some list. If you just want to reach out to us because you're like, I have a quick question, Twitter is the way to do that, at TJ Reazor. You'll get things like this. We don't make you subscribe to the videos to get them. If you just want them, you can go to our website and get them. You can go to our Twitter feeds and grab them. You can email me or you can tweet me. I don't give out my set phone number anymore. Let me know you follow me on Twitter. And I'm so grateful that you did. I'll follow you back, and then we can text message. And Danny's is at one Danny Stewart. Mine's at TJ Reazor. There it is. Danny is one Danny Stewart, and then Don is D Vandenbord. D Vandenbord. Correct, right? So there's D Vandenbord. And then if you want to reach D Snyder, he's right there. Oh, come all ye faithful. So listen, let's go over some moves that we made here this week. I'm going to let Don lead it this week. Go ahead, Don.
Lots of moves. Lots of stops being hit Monday and Tuesday. honestly, I could talk for probably 15 minutes, but I went over them all in the video. So
Give
go
me
look
give
at
me a
that.
recap. Give me
Okay.
the bigger ones, a recap of them.
One that got stopped, snow, SNOW. 250 was a big area for snow.
Oops.
It broke out above it. When it broke below it, it went on sell watch. When it gapped up and failed at it on Tuesday, that was sold.
Okay.
Let's see. I got stopped on PayPal, and it's higher now, but that's okay because that's part of the. I know PayPal is a good stock, but I was down 8% on it from the entry. It should have held above the 50-day. It looks like the 50-day is acting as resistance now on
It's
moves
actually
higher
below the
for
100
PayPal.
day
The
today
50
as well,
and the
Don.
100, yeah,
Yeah.
they're all bunched up there along with the 21. So although I like it, I got stopped out on it. But I did get some Wednesday things turned to the better for growth stocks. UPWK was, you know, this is the, if you could zoom in a little bit there on the action.
Oh, sure.
This is one of those ones where, you know, is it a pullback or a sell-off? Do you own it or don't you own it? This showed very strong action closing at the top of its range Tuesday and Wednesday, and then sorry, Monday and Tuesday, and then when it broke above the top of that little range on Wednesday, I bought it in 2 pieces, and this is acted fantastic. I wish they all did this. GRWG on earnings was another one.
Looking great today as well.
If you could zoom in on like the last week or so.
Yeah. Oh, hold on. I somehow let me fix that. Go ahead.
Yeah. So you see the nice pullback, and then after hours Wednesday, and then in the morning of Thursday, I added to it, and that's continued higher. And that's about enough. The rest of them are covered on videos. There have been a couple. CRSR is one that I added to also on Tuesday.
I like this stock. I want it to come down to the 20. It came down moment there. All right, let me go over what I deemed to be my most frustrating day, I think of 2020. And so I'm looking here at the website. So last week I had Friday's video. Don has Friday's video this week. He'll do the 21 over 21. And so I'm looking, here we go. Here it is. I put out the Friday night video, the pattern that could lift the NASDAQ to all-time highs. And so you wake up Monday and the market's just, I got up at like 4 and the market's just working. And so here's Monday and the market is up here, okay? And I'm thinking, this is actually happening. Oh, this is great. And look, to find the pattern, pick it out and actually identify it. And look, it's one thing that you think something, but it's really hard to do what Don and I do in regards to you put your name at, like there's a reason why there's like, we're one of the few, I don't know many actual people in this industry that do the transparency and attach our names to it the way we do. Like you kind of own your ideas. It's not some general, diversification is the way to go, or it's not some broad stroking. It's no, this is what we think is going to happen, and you kind of own that. It's hard and difficult to do that because you put yourself out there. So when you think you've nailed it, like at 4:15 in the morning, like this is going to be a great freaking Monday. And then what is very good news, the Pfizer news comes out, and the Pfizer news with the vaccine is great, right? Except for NASDAQ stocks. And so the NASDAQ just starts tanking. And then I had what I thought was the best entry of the year on this stock, and this is the one I want to cover, Fiverr. So it goes out at 191. Here is 11.9. This is Monday. Comes all the way back to the 34. And I'm thinking, okay, I can hold that. That's fine. Comes back to the 50 mid-morning, and then As it does this, I'm just like, I can't hold this any longer, because this thing could turn into, it violated my risk parameters is what it did. And normally I wait till the end of the day to sell something, but even waiting to the end of the day, I don't think would have saved it. I had to go, because I've seen this happen before. And I did this last night, but not everybody watches the video. So just give me a second while I find something, please. I'm going to find this ticker. Now, when you don't honor your stops, first off, everyone who's watching this video or presenting this video has had an opportunity to not honor their stops, and they've gotten severely burned. And you remember those things. So Don and I, okay, I have to look it up all the time. I didn't realize it changed. So we honor our stops, but they're hard lessons learned. And so in March, Don and I both bought Luckin Coffee in the different portfolios. And it was a moving average, moving average stack looks like it wants to break higher. And then the market's changing. You can see the dates down here. The market's changing. It breaks all the moving averages and we sell. And I believe it was like a 5 or 6% loss. Now keep in mind, you're operating in a vacuum. You don't know what's going to happen, but all you're doing is honoring your plan. And it's really, this is the one I printed out that I used to, and I use the words try to keep me honest, because every day I think you're trying to fight your emotions or the psychology behind what's happening. At least I am. And so, and just admitting to that or acknowledging that, I think is a step in the right direction for traders. And so it breaks and we sell. And then, of course, the news comes out. But you don't know, like there's no earnings down here that happened. You don't know that's going to happen. But when I look back at, and I'm not saying Fiverr was fraud. I'm not saying that in the least. What I'm saying is that when I don't honor my stops, I know what happens or what can happen. And this actually exceeded it. By the time I sold it, this was a double-digit loss for me. No, was this, or maybe Docu was? I don't know if this one was. And it's frustrating. And now to see it higher than where I bought it, because I bought it right. Danny and I bought this. This is one of the best purchases I made all year. Got it coming cresting. And I watched from 148, 150 is where we entered it to do this. I'm like, oh my gosh, this is absolutely the winner. And then to do this, to not say that that's frustrating is a lie. It is completely frustrating, but you can't let that stop you. And what do I mean by that? So you just sell and move on. And there's a couple.
Can you put that on an ATR chart, Tim?
Oh, absolutely. Sure. Let's do that.
Something I was talking to Hunter about over the weekend is, and Mark Minervini has written 2 very good books on the market too. And he's got a chapter in there about how he focuses on the velocity of money and taking those 15 to 18% gains when you get them in a couple of days, because the odds are you're either going to go sideways or worst case scenario, you get a violent sell-off and it does what it did. So you didn't quite get up to the third ATR on that one, but I've been trying to take at least partial profits and then setting a stop at break even on doing it more frequently than I used to, because looking back, especially with Monday and Tuesday being fresh in my mind, looking back at so many stocks that I had 15 to 18% gains on that went back to low single digits in the case of 2 days. It's tough to sit through that, but you'll sit through that if you're giving back an 18% gain to a 3% gain, but you won't sit back to it if you rolled that gain into something at a low risk entry and that was immediately down 7%, you'll just cut it immediately because hey, it's not working.
And completely, in hindsight, completely mishandled. Like I was handling it. Okay, I think this is the kind of stock that gets up to its third ATR, which was up here at 207. And I'm thinking, yeah, that's exactly where we're going. And nope. Monday had different plans for me.
CrowdStrike and Zscaler are 2 that I had, 18% gains on. They were acting fine, trending higher, pulled back to the 21. I'm thinking, no problem, pull back to the 21. And then it broke to 21. And then you're like, well, we've got a decent amount of space between the 21 and the 50. Do I give it that amount of room or don't I? And that's when it gets difficult.
Yeah, and so I'm pointing this out because just because this happened, like, I mean, this is, believe me, this is, it's just part of the game. But to say that you just take it in stride, no, you acknowledge it because I know what's happening to stock nerds across the globe. And so, but that doesn't stop me from doing this. And so Tuesday, I bought Boeing. And so, and you can say Boeing, but I bought Boeing. We bought Boeing right in here, okay? And so this is a gap up. I have my own gap up rules. I don't talk about them because Don's got a really clear set of gap up rules that he's been training stock nerds on. And it's like, okay, I call up Danny, let's get some Boeing here. And we buy Boeing. If you look at this on another chart set here, let me get this on there it goes. So Boeing, what was Boeing doing when we bought it? It was trying to come up through hold on a second. Let me just make sure I got it. Friday, Thursday, Wednesday, Tuesday, right here. It came up through the 200 day is what had happened. And so, but here's the thing, we bought it right in this area above the 200 day. And so then I know that the 200 day isn't some, okay, if it closes below that, I'm going to sell it. No, I've got a level, but I'm not going to buy it up here, chasing it. And so what am I saying? I'm not going to buy it as it accelerates past the third ATR. I'm going to buy it as it's coming through the 2. And now what you've got here is a bull flag forming on a really bad looking chart. But if the rotation on a bad looking long-term chart, this is a great looking chart right here, but long-term, I don't know if Boeing's going to work. But what I'm telling you is that I'm using 2.5 to 3% position sizing. So none of my bets in the market are anything that can ruin me. And I know a number of you are concentrated, 25%, 20% positions. Those are tough. When you buy extended or it pulls back or it just goes against you, those are really hard. And when it's the hardest to make decisions when the bullets are flying at you. That's why there's rules. Like when you're being quote unquote shot at, it's really hard to think. You're just reacting at that point, and you want to react based on your rules. And so there's this great rotation going on. Think about Tuesday. Still, everything's valued down. We're buying. And I said to Danny, "Hey, there's 2 stocks. I've been looking at, Love and Boeing." And so Danny says, "Okay, I'll load them both up." And I was dropping the kids off, and I was just about home and dropping them off at school. And I got up to this, boy, I have my best thoughts on this one hill in the town I live in. And I called Danny, it's like, do not buy Love. It's not Love. You got to buy Boeing. And he said, "Bo, why?" And I had the charts in my head and I was thinking about them at a moment of clarity. And I just knew where they were in time and space. And Love, it turned out to be right. Like Love in the airlines, they went up dramatically. They were open. Here's what was happening. They were opening up above the third ATR. And I had that chart in my head. I'm like, that's where they pull back from. And you can see they're still not where we would have entered. They're still not back to that level yet. But Boeing's a gain for us. And look, just because I had that happen with Fiverr doesn't mean I'm not constantly screening. I'm not stopping the process. I'm not throwing up my hands. And your mindset that you bring to this, like every time you buy a stock, it goes down. Every time you sell a stock, it goes up. It starts to affect you. It can warp your decision-making ability. And so if you have a setup that you're constantly going back to the well to, I think it gets a lot easier. And I'm going to pass it to Hunter here after I talk about Restoration Hardware.
Well, real quick, one more thing on Boeing. Once we had it preloaded, it makes it easier. So I had it preloaded, and I was just sitting there watching it for a little while I've got a bunch of screens. I was doing something else and watching the volume because it did have that initial pop out of the gate, and I waited for it to pull back some and then start to reaccelerate, and then you pull the trigger.
Yeah, and so look.
There are at least six positive things I can see just from this gap up. First of all, it's Boeing. It's a $100 billion company. Yep. Institutions, if they have to move money, are going to move it into stocks like this. 2, it had the gap up. 3, it had the volume with the gap up. 4, day 2, it made a higher high. And 5, it never broke below the low of the gap day. And 6, now it's above the 200-day moving average. This is it's all you could ask for with one of the following my gap rules. It's all you could ask for.
And so that, and somehow in my, I don't know, I wish I would have thought of it earlier, because I would have talked about it on the call. I had to call Danny back after a call and go, no, don't do love. So let me bring up Restoration Hardware, because I had a couple questions about this consolidation. And what's interesting to me is, like, this is the most perfect consolidation I know. Like I love pins, but I love this. And I triggered into this on Wednesday at 399. Danny tripped into it at 399. So here is Friday, Thursday, Wednesday. So here, Restoration Hardware holds the 21. And so, okay, that's a positive for me. And I can see it moving on, and I use smaller time frame charts. I'll work it down to like a 4-hour here. And so here is 8:30 on Wednesday, and you can see from 380, it starts coming up, and it looks like it wants to take over the 8 on a daily chart. I'm like, I want to get this. So Danny trips into Restoration Hardware, and if you look at that daily chart again, that's just one long big consolidation with this dip in here towards the end of the month. But if I take it now to, let's go to a 2-day, and you can see what I was seeing. So this is a 2-day chart, and now you've got the breakout. And then if you go to a 3-day chart, and so if you wait for confirmation, and so someone asked me, aren't you early? And I'm like, no, you want to be in these things. For me, I want to be in these things while, like, when I think the consolidation is starting to end and I'm getting my signaling, because what I don't want to do is I don't want to buy the breakout, which in this market environment for a while now, it's been, if you buy the breakout, you're buying an extended, because there's going to be a chance if it pulls back that you're going to get shaken out of a leader. And that happens all the time. And so I want to buy and start laying my position base down in the consolidation. And then because because I know, and I hate to use that phrase, you don't know how long a consolidation is going to last. And RH this has been one big long consolidation since its last earnings period. But it looks like these 3 last days here, it looks like it wants to potentially start trading above this range. And how high it goes, I don't know. If it breaks lower, you just sell it. I know my stop out point. So being able to figure that, see these consolidations, take it down to a 4-hour chart, take it down to an hourly chart. It allows you to see your trigger points and your entry points, and they're on your radar well beforehand. And I love the weekly part of it. Just like I love the weekly chart of CSIQ. What's CSIQ? That, I mean, it's down 2% today. I love this chart. This is a stock. Let's just minimize it. So the last time CSIQ was up at these levels, you have to go all the way back to 2013, or is that 2014? So it's challenging 6-7 year highs here. Let's see if it could do it. And so
yeah, Tim, it's sitting right on the 21 on a pullback of about 2% on about 50% less than average volume. So
yeah, this is where you'd enter it. This is, yeah, I've got my position in already, but this is where you would absolutely enter it. And well, Tim, what wasn't below the 21, and I'm going to get out of it because I'm not going to wait around to see how earnings turn out. That's a mistake. But this is where you enter these things. And so you can't, days like Monday happen, man, but you just got to be able to press on it. And that's why I like doing the videos the way we do when Don and I are doing these things. I know it's after the market day, but it's real time. And you're getting our process. And so it's easy in hindsight to go and try to make it look like the best. No, understanding realism. Like, the best thing about what we do for you, stock nerds, is the transparency, because you can't fake this authenticity. And that's what separates us from every other shop in the world. That's why we have worldwide viewership. That's why we grow without advertising. We grow without sales exponentially. And that authenticity and the realism is what helps you find success. And whether you ever become a client of the firm or not, you're telling, that's where I want to thank folks like Uncle Tony from San Diego, and you know, and Mark from Buffalo, and guys like Jeff, who's a Chiefs fan. Like, they're telling people about our work, and that's and to have that word of mouth, like we're tip of the mind when somebody says anything about the stock market. To have that is the best advertising we could ever do. And so what we chose to do, the business model developed years ago, was we invest in you. And doing that has allowed us to flourish. And I can't say thank you enough. And actually opening up every night these videos and listening to these podcasts and watching these podcasts, I'm telling you, it makes a difference in the world for us. And then your interaction with us. So I'll turn it over to Hunter. I just want to say thank you to the Stock Nerds for all of that. And Hunter, give me what you got. I'll tell you what, we're going to end with Hunter. Danny, do the show outro, and then let's end with Hunter. So let's get your thoughts. We'll do Robinhood next week, because that story ain't going away.
Yeah, no problem. No problem.
Yeah.
Folks, listen, if you like what you heard, please tell a friend, tell a neighbor, just send them to revereasset.com. They can go to the subscribe button, and that'll send them not only this podcast on the weekend when it goes out, but our daily market insight videos that Tim and Don alternate. They do them every night for about 10 minutes when the market's open. And it really, for the stock nerds, the red meat lovers, that's where you get just right down to the heart of it. You can also sign up for webinars, and Don, about once a month, once every month and a half, time permitting, he does a hour-long lunch and learn on Wednesdays at noon Eastern time. And even if you're working or you can't make it, sign up, because he'll send you the recorded video of it. But if you do it live, he does a Q&A at the end. And so you can ask questions. You can also email any of us at dan@revereasset.com, Tim at Revere Asset, Don at Revere Asset, or now Hunter at Revere Asset. You can also call us.
All compliments go to Hunter.
You could also call us old school at 855 Real Wealth.
And I'm out of topics for the lunch and learn. So if you've got a suggestion, email me, Don at revereasset.com.
That's a great.
And by the way, there's a whole archive, a whole analogy. We've got them posted all on the website, but they're anthology, sorry, on the website, but they're all buried in there with the daily market insights when he does them that day. And so a very easy way to see where they all are archived, as well as this a radio podcast. Just go to YouTube and just type in Revere Asset, and they're all right there, all in order. I
must be doing this wrong.
Something like that, yeah.
15, 20. And you talk about learning videos; those are really, really help.
Okay, Mr. Hunter, what you got, brother?
All right, I got a couple of individual names for us, then a couple of comments on some industry groups. So I'm going to start with TSM, Taiwan Semiconductor. This one has shown pretty significant relative strength within their space. If you look at their chart, you can see they've held up well, even while the market was selling off. And then today they're up 4%. And so I'll talk about it in just a minute, but the semiconductor manufacturing and semiconductor equipment have both been very, very strong industry groups. And so what we're doing here with TSM is we're trying to identify, okay, what's the strongest, what's the leader within that group. So on this one, it might be a little bit too extended to buy here, but you set an alert at the 21, keep an eye on it, because it's really been showing strength compared to its peers. Secondly,
I want to point out something about TSM. When Hunter brought this to my attention and I looked at it, believe it or not, this is a $500 billion company, but it's not in the NASDAQ 100 and it's not in the S&P 500, which means when tech stocks get jerked around and people decide to sell the FANG stocks, this one doesn't get impacted by that. And that's one of the reasons why it has acted so well that Monday and Tuesday of this week, when you saw really harsh sell-offs.
Let me rephrase what Don just said for the layman. The stock nerds caught that, but a layman may not. So when you've got massive broad selling, forget the semiconductor, just massive broad selling, and people start selling because they're scared, if you're in the index, the S&P or the NASDAQ, they've got to sell those individual stocks in those indices just to do it. So if you're in that index, you get sold off even if people like you. So because that stock is not in the index, it doesn't get caught in that downdraft.
Very true. My next one is Renewable Energy Corp, ticker symbol REGI. This one is in the alternative energy space, and Plug is the other name that has really run up, but this one was also showing leadership as well over the last few days, and it's actually pulled back to a reasonable point here, which is why I'm covering it and not Plug. Plug is very extended, but just keep an eye on this one as well. It's only about 3 or 4% above their 21 EMA here, but it's been a leader. RS has been kind of flat. It's been consolidating since it hit a high of 66 roughly. But just want to keep an eye on alternative energy. Seems to be doing well. You know, that's one of those things that with the Biden victories, people seem to be flocking to. Last individual name, ONEM, and I've got another gold nugget as on top of Don's first one that we had today.
Is this right?
This is
Oscar November Echo Mike.
Correct.
Yep.
You're right. It's One Medical is the name of the company.
Gotcha.
One Life Healthcare. So this is a subscription-based or membership-based primary care service that uses digital health. So think of Teladoc, right? It's a similar thing. They've got remote visits. They've got virtual care 24/7. So the difference here is this company has their own team of doctors. And if you subscribe to this membership, you get virtual care 24/7. Your kid's got a strep or a runny nose or a sore throat, you can call into a doctor, and it just makes life a little bit easier, right? So the nugget here is if there's a product or a service or a company that makes life easier, henceforth allowing the normal people, everyday people, to have more time to do what they want to do, or similarly spend less time doing what they don't want to do, there's inherent value there. And an example is Amazon, right? It made shopping easier. You can find stuff easier. You can get it shipped to you. You don't have to go out. You don't have to look for stuff. So just something to think about, right? You know, you've seen Teladoc had a big run up. This company also did around that same time. They ran up to $45, but they had earnings a handful of days ago, 3 days ago, and they've looked really nice over the last 3 or 4 days. So kind of a revolutionary company in the healthcare space, but check out their website, look at them. I think it's a really interesting business model and something worth watching moving forward. So that's all I've got.
Not only that, it's sometimes it's almost damn near impossible to get an appointment with your primary caregiver. Just trying to get an appointment to go into the doctor. So if you have a backup or something like that's
well, and not only that, but they're pretty progressive as far as mental health, LGBTQ mental health services. They're really doing a good job, and it looks like they're growing pretty well as on top of that. So it's I mean, basically anything that you would normally go see a physician for, aside from a very, very acute issue, they have you covered, and you can do it either via a remote visit or on-demand virtual call. So it's a really cool service. I think it's something that's very interesting. So I'll be watching it moving forward. Lastly, a couple of industry groups here. I've already touched on semi-equipment and semi-manufacturing. TSM is in the semi-manufacturing group. LRCX is a name that's in the equipment group. And so when I was going through the industry group data this week, and for the past 5 days, basically, you get mixed signals, right? Because on Monday and Tuesday, you saw defensive names like banks and oil and gas and leisure travel and booking and things of that nature really outperformed. And over the last 2 days prior to today, you've seen growth come back a little bit, and some of those stay from home or work from home names have done well. So what I really was looking for in the data was what held up and did well while growth was selling off, and what is continuing to do well while growth has come back. And this group, semiconductor manufacturing and semiconductor equipment, has done very well. It's held up well, and it's outperformed on the up days. The second one is agricultural operations. We've already touched on 3 of the main names in here, the leaders. DAR is in that group. GRWG, Don touched on, is in that group, and CTVA all have held up well when the market was selling off and performed well over the last few days. So 2 groups to keep an eye on that aren't, your standard airlines or enterprise software, just something that's a little bit different, that's held up when the market sold off, and then performed strongly when it's kind of come back as far as growth in the last few days.
Love it.
So that's all I've got. I do have one parlay.
Give it to me.
And
I've got one
I'll be
question.
quick here.
No, when we're done with the parlay, I've got one question for you, Hunter.
Okay, so sorry to Mark from Buffalo, but I'm going with the Cardinals this week. I think they bounced back after a loss to the Dolphins.
You
But
never sell the Bills. You buy the dip on Josh Allen. That's what I'm told.
It was the hardest decision for me because I really do like the Bills, but I think Kyler Murray is incredible as well. So I think they bounce back with the win this week. Could be wrong, who knows? But I've got the Seahawks, I've got the Cardinals, I've got the Saints, the Raiders, the Packers, the Bucks, the Texans to beat the Browns, and the Ravens to beat the Patriots. It's an 18 parlay, $10 pays out $308.
The
Good luck.
parlays. You know, I read something on Twitter about parlays, and I love the parlays. That's why I'm genuinely interested in what you're doing. I don't play them. I don't bet on sports. I don't want the stress of it. I don't even know. I haven't watched much. I watch Eagles football, which is stressful enough, but that's about it. Oh, by the way, Hunter.
Try Dallas.
The dancing quarterback from Denver. Here's my dilemma.
He had a good week last week. Yeah, I think he's a decent quarterback. He's got some moxie. I like him.
My heart is torn. I got the Carson Wentz and the dancing quarterback.
That's
I don't know
tough.
what to do. I know, right?
I'm not going to lie to you, Tim. I spared you from breaking your heart on the show today because I really wanted to pick the Giants to beat the Eagles, but I just couldn't do it.
I think they could.
I think they can as well. I don't like it.
It's
risky.
It hurts. Risky. So the parlays. So when you're a sports book, like when you're a sports business, there's like in Tennessee, the state laws, you have to keep like 10%. You have to keep a certain amount of money in house, like just like a life insurance company has to keep a certain amount of money on hand. So what the sports books do in the states that they operate in is they offer these incredible parlays, preset, like you're building your own parlay, correct?
Correct. Yeah.
Yeah. So, but they'll offer these incredible teaser parlays, like bet $10 and you could win $1,500 if it hits. And what they're doing is how they build their cash reserves up is through the parlays. And I didn't know that. It never dawned on me. Like there's such low odds of hitting that it's attractive to because what they need is the average sports bettor to lose. And so they can build up their cash reserves. And then the ones or twosies that hit are great advertising for them. And so I'm like, oh my gosh, I want to become a sports book, and I was like, that's such a great business model. It's all probabilities in the market. The reason why I like to listen to your parlays is because the markets are probabilities.
Well, we'll see how good of a business a sportsbook is with Penn and how this kind of progresses with the Barstool Sportsbook.
What is DKN? Don, you still have DKNG?
Yep, got back into it this morning on their earnings gap up. Far underwater a little bit on it, but their forward guidance that they raised was pretty impressive.
Yeah, I was wondering that. And so, Hunter, the question I had for you wasn't sports related. Give me, if you can. If you can't, that's fine. Don't struggle with it. The subgroup that you think, like the average investor would say should be, this is uber popular. These stocks are the ones to buy. And in actuality, the group has been selling off or just meandering. What do you think off the top of your head?
One that comes to mind is internet content, but it also has like Pins and Snap in there. So it's a bit of a mixed bag. It's a massive group. And I'm trying to pull up the industry group now to look at the actual components of it. That's okay.
But I think the biggest, I'll let you stall mentally for a minute here or think mentally, because my thought was when the reopening trade was happening this week on Monday with the Pfizer news, Penn and DKNG did not participate. And that's
very true. Well, Penn reversed very ugly. Penn ran up to 75 on, was it Monday? When was that?
Yep.
11.
Big gap up and failure.
There it is.
Maybe bullish now with all the closing talk again.
Well, I don't know, but my chart's frozen there. But that's what was interesting to me. It's like, you know, there's so much happening in the market right now. It needs a day or two to figure itself out. You don't worry about it if you can't come up with something, but this is why we
Well,
bring you this segment. Okay, what you got?
There's another, I mean, granted, they're not selling off massively. They don't look awful, but energy, solar, and weed, they've had big moves. But if you look at the solar group, I mean, they've pulled back off their highs. They're, as an industry group, they're close to their 21. And you know, the conception going into the election was weed stocks are gonna go up massively, and they've increased, but they've been consolidating after they actually confirmed that Biden is most likely going to win. So they ran up prior, but they've been consolidating since. So that's one where you probably had people run out and buy Canopy Growth at $27 and they're underwater. Or you had people buying names like
Tilray and
AKS and a lot of those names. So not to say that they're broken or they're ugly, but they, you know, they haven't been just going up like a monster over the last 5 or 6 days. So, you know, that's a group where the general consensus was, well, these are the Biden stocks. These are the ones that are going to skyrocket. And granted, they bounced, but they haven't really done a whole lot since the election even happened. So
yeah, they seem to have front run the election, and then it was a sell the news situation.
Mm-hmm.
Yeah, very interesting. I think we should do that. Let's add that if Don's okay with that to the weekly. What you think is happening may not be happening type segment. I think that's because debunking.
That happens a lot in investing, by the way.
And you know why a great reason to do that is because you might have a top 20 group that people are looking at, but under the surface, you can stay in the top 20.
Yeah.
You can overstay in the top 20 if you're actually losing relative strength.
Yeah.
We want the ones that are rising from 60 to 40 to 20, not the ones that are falling from 10 to 15 to 20 to 25.
Yeah, because debunking the conventional wisdom is we don't come out and say we're that's not the purpose of the show. But what we do through fact-based price action is we take you out of your mindset to just show you what's happening, and what's happening might be your mindset. So that's why we don't come out and say we're not debunking anything. We're just showing you what the truth. And so I think that's a good segment, a good piece to add to what you do, Hunter. Okay, Danny, take us home.
We'll talk to you next week on Your Money.